I'm Aiden,
I'm Brendan.
and we did checking accounts. A check is a written order directing a bank or other financial institution to pay money on demand to the person or company named on it, and is also a common medium of exchange between businesses and consumers. A customer opens a checking account by depositing money into the bank. The bank provides paper checks, and the check is paid to the payee. The payee is the business or person to whom the check was written, and the payee can choose to either deposit the check or cash it in. Once the money is paid, the check writer's bank voids or cancels the check.
Types of accounts. The first type of account is a regular checking account, which is designed for customers who write few checks a month and don't keep a minimum amount of money in each account. Withdrawals are from checks or ATMs. A direct deposit allows electronic transfers of payments directly from the payer's account to the account of the person being paid. An interest-bearing account is an account that earns interest on the balance for the depositor. And a joint account is an account that allows two people who are equally responsible for the account to write checks.
Checking account security. You need a signature card to verify your identity. A signature card is a record of account holder's signature used to verify your identity. If the signature matches the one on the check, then the check is cashed. If it is not, then the check will not be cashed. You must also provide your address, phone number, and the answer to a security question of your choice. The bank then assigns you a checking account number and issues you a book of checks.
Checking account services. Overdrawn is when the account owner has written checks for more money than the balance in the account. Overdraft is the amount that is overdrawn from the account, and overdraft protection is a line of credit for overdrawn checks, and you must pay a service fee and interest for overdraft protection. Stop payment is an order for a bank not to cash a particular check, and it requires a fee. A debit card is a bank card that immediately takes money from a checking account when it is used.
Parts of a check. Different elements of a check provide information that can be used in financial record keeping. There are usually 3 people or businesses named on a check. The payee is the party to whom the check is written. The drawer is the party who wrote the check and is paying the money. The drawee is the financial institution where the drawer has an account. Banks use this information printed on the checks to route a check to your account for a payment. A check must include an account number and a bank route, which traces the check back to the account of which it was written. A check also includes the name and location of the drawer's bank, a check number, and security features. A check must also include a valid date, the drawer's signature, the payee's name, and the matching numerical and written amounts.
To deposit cash or a check, fill out a deposit slip. The deposit slip lists the amount of cash and checks and the total amount of the deposit. You may deposit at a bank or through an ATM. After making a deposit, record it in your check register. To cash a check, you need an endorsement. An endorsement is the signature of the payee on the back of the check. Don't sign a check unless you're ready to deposit or cash it in. Write for deposit only in case it gets stolen.
Bank statements. Once a month, banks will issue bank statements, and bank statements are the record of all your transactions. The statement includes a record of all withdrawals, deposits, interest you've earned, and fees. It also includes the record of canceled checks. Canceled checks are checks that have been cashed.
handling your checks. Don't print or write your driver's license, social security, telephone, or credit card numbers on checks. Keep checks, canceled checks, deposit slips, and bank statements in a safe place. Check bank statements for anything unusual. Make sure your checks have security features. Destroy old documents that have your account number on them. And never make checks payable for cash.
Balancing your checkbook. The first step is to make sure that the bank has processed all of your checks and deposits. Outstanding checks are checks that have been written but have not yet been cashed. The total amount of outstanding checks should be subtracted from the balance shown on the bank statement. If you've made any deposits or ATM withdrawals that haven't been recorded, they should be factored into the balance of the bank statement. Once the balance on your bank statement and the balance in your check register are the same, you've reconciled your check register balance, or you've balanced your checkbook.